Hey, this is Jeff Scott. It is Saturday night, 10 p.m. on the 24th, and this is this week's review. Obviously, Sunday's the 25th, and hence what the date shows. So, are we ready for another leg up? That's the question mark. Or does the Powell testimony slay the bull? I think we're going higher. Let's talk about it. This is for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am not licensed by the SEC or any other entity to tell you how to trade your own accounts. So anything I recommend is just what I might be doing and for discussion and education purposes. I am truly independent. I pay for all the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I always like to talk about being your own guru. You should not rely upon what somebody, a talking head on YouTube, or who wants to sell you something, what they say, but rather understand yourself and what works for you. So to me, learn from many folks and then become your own guru. I started with CanSlim, learned a ton from this guy here, Ian Woodward, my buddy George Lee, Van Tharp, position size and money management, and John Person, just a great trader. Once you get a list of stocks, how do you make the trade? What do you trade? And that's what John taught me. I own a lot of different programs. What I need is a real-time charting platform. I use the three that you see. TradeStation and Thinkorswim are necessary for me. Genesis if I'm trading futures. Yes, I have interactive brokers and a few other things that I use for data. But with TradeStation or Thinkorswim, I can do anything I need to do. HGSI is what I use for my analytics, and EdgeRater supplements that. Yes, I trade seasonality. I own them all, and there's a number of websites I use. Speaking of websites, here's the highgrowthstock.com. This is no relationship to me. I get nothing for you going there. I get nothing if you buy it. Why do I point it out? Because it's a free 30-day trial. I think it's a great program. Under investing strategies, you'll see my name and Ron Brown's, and we have very frequent videos to show you how to trade and how to use the program. Stocks are cyclical. Every time it looks like we're rolling over, we take another leg up. We had our 10 to 12% corrections that everybody was looking for, so now do we go higher? We'll see. Rates are higher. Lots of fear about how many increases the Fed's going to make, and Powell addresses Congress. So we'll talk more about that as we go. So I have been setting myself up aggressively. I've been buying stocks and calls off the bottom, cover calls. I'm not a big fan of because I look at things like Weibo, and I did a great buy, but I've got a short position with a covered call, so I'm not going to, I've already pretty much maxed out the game because my short calls are 140. So I always wonder why when I'm bullish I sell calls. I know why I do it. It helps me to mitigate time value. It helps me to mitigate the cost of a premium, but it still limits some of your upside. But I've been in a bullish stance, and you'll see how that's worked for me. You can't see much here except you don't see any red at all. This was a very strong market, and across the board, the sectors were strong. Let's take a real quick look into Thinkorswim. Now, just another comment about TradeStation. If you are a TradeStation person, and I am a TradeStation person, you may be frustrated because the radar screen in 10.0 still has a lot of problems. I would not be upgrading to 10.0 unless you have a reason to until they sort out the radar screen. But that said, you can just look at how we've broken this into various sectors. On the sector ETFs, only one that was weak, and just mildly on Friday was gold, home builders, materials, energy, XOP, OIH, XLF. Look how strong the banks were, broker-dealers, credit cards, technology, semiconductors. Now just look on the right-hand side. Staples, discretionary, retail, utilities strong despite higher rates, healthcare, biotech. This was just a rip-roaring market. The only weakness in some of the metals, and I guess interest rates are putting a little bit of a damper on housing. REITs even were strong this week, casinos on Friday. So it's a very strong market. If we take a look at some of the major markets in Thinkorswim, I think we can learn a lot as well. So what I have here, I'm going to go through six futures, 4 indices, the dollar and the VIX. On all of them, I've got 17 in green, 50 in yellow, and 200-day in red. OBV, regular volume. Up here are some of the things I like. such as MOBO breakouts, am I in a squeeze, bongos, etc. And if they're green, they're in play, and red, they're in play. If they're gray, then they're not signaling. If this was a stock, I would have a stock in an uptrend that's pulled back, poised at the 50. I would be interested in buying that stock because those are the things that usually work for me. So here we have a significant pullback made up about half of 2, 3, 4, 5. We'll look at how this week did. It looks like we're up a little bit on the close, but didn't break over the Monday 1, 2, 3 high. Here's the close from last week. So it was up a little bit on the week, but not a rip-roaring week on the E-minis. We'll look at how the S&P did. But poised to go higher. And what I thought we'd do is we'd run up and we would chop. Now, typically we chop longer, but this looks like we might be set to go higher. If I look at the NASDAQ, it's already broken out above its moving averages and looks strong as well. We look at the Dow futures, just like the S&P, ran right up and is chopping around right under the 50. Broke through on Friday. Let's see if it can continue and sustain a rally. And the IWM chopping around right below the 50. So this is what, if you go back a few weeks, I don't want to toot my horn, but take a look at my spreadsheet about 3 weeks ago, 2 weeks ago. I nailed the E-mini target to the downside. And I also thought it would run up to the 50 and chop. I don't know how long it's going to chop for. I get the sense for some of these charts it's ready to break through. It might be a little too soon. We shall see. On the VX, you can see the VIX futures have come down considerably, but they're about 25% higher than where they were basing in the past. Not sure if that means anything, except there's more volatility in the market. And the dollar on the daily continues to drop. It rallied up here above the 17, and looks like it's getting into congestion in here. When the dollar strengthens, that's not necessarily good for the market, but it's really not good for gold. Now we can look at the weeklies as well, and I'll do that for 1 second. I like looking at the dollar on the weekly, so let's just go down here. Let's pop this puppy out. Hold on a second. Oh, I'm never going to find it. Well, here it is. Awesome. Notice the dollar, how weak it's been. It's bounced off the bottom, but it's still fairly low down there. And you can see that over the longer term on the weekly charts, we had that hiccup in the market. We haven't quite made up what we lost. And we're somewhere in the 50-50 range. All right. Back to the presentation. I also like, with Genesis, one of the things I can do is I can have 3 rows, the daily, the weekly, and the monthly, and then the columns are the E-minis, the NQs, the TFs, the YMs, and the NYSE, or the NYSE and the YMs. And you can see that long-term we're in beautiful uptrends. We've actually flipped to buy signals on the E-minis and the NYSE and the Dow futures. We've been in a buy signal on the NQs, and the only one that we haven't flipped to a buy yet is on the TFs. So the markets, if you look at the weekly, really have reversed, still haven't taken out their prior highs. They're probably a little bit more than halfway up. And this is not a candle that you see in a market that's rolling over. It still shows strength. Now, rates rose a little bit this week. Where they rose more was on the longer end, which means the yield curve is steepening, which is probably better than the opposite. You don't want a flattening of a yield curve. That's something that might tell you have a recession coming. AD lines continue to rebound with the S&P 500, so no divergences there. And if you look at the white being the NYSE AD, then you have various sector ETFs. The only thing that's diverging is bonds, and that makes sense. Interest rates are going up, so the price of bonds and thus the TLT is dropping. Now, interestingly, breadth has bounced some. This is stocks above the 200, stocks above the 40, but still far away from overbought. And what really surprised me was my 3-month new high, new low. That got down this low 2 weeks ago when I said the market was done going down, because this gets to a point where you always see a reversal. It's dropped this week. So despite the indices moving up, it hasn't yet led to an overbought scenario. Tells me market could still go higher. The McClellan, no huge divergences at this point. Still pretty negative on the summation index, and kind of, again, suggesting that you could even go higher from here as well. I look for extremes, I look for divergences, I look for zero line rejects, which we kind of had here. It looked like it was pulling back to the zero line and went higher again. And on the, not much different on the weekly. Now, other things that I look at, the buckets. Take the S&P 1500 and look, put Bollinger Bands on them and see how many are above or below the midline of the Bollinger Band. It's a little bit over 50-50. And then you could look at the first 10%, second, so on and so forth, how many are below and how many are above. And again, looking for evidence of extremism. If I have a lot below, the market's going to rebound. Go back and look at 2 weeks ago. If I have a lot above, I start to get nervous. This is a neutral picture. There has been no HINDY since the last several fired a couple of weeks ago, and we worked out with marked drop in the new lows, but no active HINDY signal today. Market tone decidedly bullish. We look at this third set, which is the Woody indicator. The sectors are all green as well, so a very strong market here. Now, 3 indexes that I look at to give me a sense of what's going on. The Canaries, not quite at new highs, because we did sneak above here last month, but at new closing highs. That's got to be bullish, and certainly this rally looks to be led by the same stocks that took it down. As you can see how deep it pulled back, which are the FANG stocks and a couple of other goodies. The Scott Index, I took the leaders in the market in June when I thought the market was starting to top, and these continue to set new highs. So that's also very optimistic with pocket pivots and kahunas on the index. It's not a very common thing. And then I created a melt-up index of the leaders before the market crashed, and I created this to give me an early warning signal. And interestingly, it pulled back hard, almost down to the 200. And it's had a big recovery, but unlike the Canaries and the old E index, has not moved out to new highs. So, it tells me the market is strong and lots of different things are recovering, but it's those FANG stocks and a few others that are leading the way. Know your news and earnings. Lots of big earnings this week. Broadcom all over the place with its takeover try for Qualcomm, Priceline, EOG, Express Scripts, TJ Maxx, Valet, Salesforce.com, Lowe's Corporation, JD.com. So a lot of stocks that are commonly traded. This is not an exhaustive list. As it says here, my quote, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Here's the economic calendar. You notice highlighted in dark as Jerome Powell speaks to Congress. This will move the market. If he sounds like he's going to be continuing Janet's policy and leaning towards 3 hikes in 2018, the market will rally. If he says anything that suggests 4 or 5, the volatility will increase, and so will the pullbacks. I think the market's likely to be tepid going into those speeches. I wouldn't expect a giant move Monday, though who knows what's going to happen. Now, you probably saw what happened last week is we had a big intraday reversal when a Fed head, who doesn't even vote, said that the markets were getting ahead of themselves when they were starting to worry about 4 rate hikes. So that may have given us a message of what Powell's going to tell us. So market continues to rise off the bottoms, still volatility. Major markets, to me, look like they're set up for another move up pending the Powell speech. Rate rise tempered as the curve steepened, which is good for the market. Dollar continues near lows, VIX stabilizing at a higher value. I'll show you some stocks, but many stocks have pulled back to support in the absence of a Fed surprise. Look poised for another run, and it's another busy week for earnings. I'm going to pause this for a second and make a slide because I've got to kind of ask for a survey. Okay, unpause it. So here's what I need to know from you. I'm considering a live seminar April 6, 2018. I need to understand how much interest there is. The assumptions, it'll be 1 day live. It's a Friday. There will not be a web broadcast. It'll be held in either Orange County or an LA County hotel, most likely Orange County. 8 to 5 live with 2 pre and post webinar sessions. The cost will be $500. You'll get a Dropbox with several of my older seminars as well. I will pay for breakfast and lunch during the day. If you're interested, this is non-committing, hgsidoc@gmail.com. I'll gauge how many people email me in the next 2 weeks and then make a decision. There is also an Orange County meeting with George Lee. I don't have any information on it as of this point. On April 7th, 8th, and 9th, I'll be speaking there, but there I'll speak for only a couple of hours, and I won't get into the detail that I can do in a live meeting. So if you're interested, let me know. Let's go on to the charts. All right, so those who have been here before know the first thing I like to do is, again, one other way of looking at the market is I like to go into my trade station and go into my market force and divergence and go into my markets. I've got to add one here. If you are a trade station person, as I said, the version 10 is buggy, and the radar wouldn't use any of the old radar screens. I had to recreate them all. So let's look at the E-minis, and then I'll tell you a little bit about what I'm doing here. All right, let me just set this up. That's blue. Okay, let's try this again. All right, so what I'm looking at are about 6 different things. First thing I look at are the arrows. These are John Person buy and sell signals. So I've got a buy, weekly is a sell, monthly is a buy. Okay. Second, I look at the color of the paint bar. Green is conviction. I can be adding to my longs. Red is conviction to the downside. I should not be going long. And blue is neutral. I got green, blue, and blue. Third thing, where am I in my outer envelope? When I got below here, going back 2 weeks ago, again, more evidence that the market was going to rebound. We're right in the midline. The fourth thing I'm going to look at is, are there red dots or green dots above the price? Because these are evidence of MACD divergence. And as you see, there are no dots, so we work those off. Then I look down here. I see my weekly bond goes red. That tells me that the market is still under pressure, and my high jump's 59. I put this neutral to bullish. I'd rather see a green weekly bongo, which is my typical buy-sell. The NASDAQ, same thing, 78% on the high jump, pretty much the same story. The Dow, a new buy signal on the Dow. And then the Russell 2000, which has been the weakest, also in a buy signal. So the weekly bongos are concerning. So I'm neutral to bullish on the markets. And one of the things that John's really great for is he's created a number of indicators. And what I do is I create my watch list, and then during the day, and I'll spend more time about this at my live meetings, is this is how I follow the market, looking for flashing lights which tell me there are new signals. That for another time. All right, so now I'm sort of mixed bullish on the market, and I'm going to go into my designer. And I'm going to just look again at the market. Now, why do I look at the market so much? A lot of people think, and I've had some negative comments about I spend too much time on the market. And that's because the market matters. And, I can look at just stocks, But if you go back a couple weeks ago when the market was falling 12%, did it really matter what stock you owned? No, it was purely the market, and you have to know the market to tell you what to do. And if you're bullish on the market and you find the best stocks in a bullish market, they go up a lot. And if you're bullish on stocks and the market's going down hard, they don't go up. So to me, the market matters. So in HGSI, I can go to Major Markets Plus, which is in the Woodward & Brown user group. I can put the top-down view, and the best of the best come to the top. So over the last few days, one day the most, 5 days some, and 3 weeks a little, the NASDAQ has performed the best. Gold and silver, volatility, miners, and bonds on the bottom. So that means the dollar must have moved up, and it's sitting right there. So very quickly, within HGSI, let's look at a couple of charts. Because I have to change resolution for these videos, sometimes it's a little bit of playing around to get these things set up the way I want them. All right, so let's just go up here. What do I see? This is, one of my charts that I use every week, and I kept calling for a pullback to the 50. We got it. We actually pulled all the way back to the 200. We had an undercut on the prior low and a rally, and this was a clear-cut reversal day. We've had a nice run up here. Again, if this was a stock, I'd be pretty bullish. The weekly bongo up here is still red. I think it wants to go higher, but I also think Powell's speech matters. That's the S&P. The Dow Jones Industrial Average looks just like the E-minis. The NASDAQ, as we said earlier, stronger, breaking above the moving averages. And then the Russell's the one that was the weakest, but it's picked up quite a bit as well, sitting right underneath the 50. So that's my indices, but what we want to look at here is the dollar and the VIX. And you can see the dollar has been in a free fall. If I flip to a weekly chart, you can see the dollar peaked back here in January of 2017 and or late December probably. Let's see, that's January 6th. This on a weekly, and it's fallen considerably. How much has it fallen? Well, if we go from the high here and we take it down to where we closed, the dollar's down 12% in 59 days. That's a pretty steep fall. So with the dollar weak, one would have expected the metals to be doing well, and you could see that gold and silver have had a nice move off their bottoms here, but with the dollar strengthening, the best they could do this week was sideways on gold. Notice how gold is above its moving averages, and they fan nicely there. Look at silver. Not so nice. And then lastly, volatility, which we mentioned, has, I need to get off the weeklies, don't I? Has pulled back and not to where it's been. So since I stuck on weeklies, let's look very quickly then. So the dollar we talked about, and here's gold on the dailies, sitting up above its 50, while silver is below the moving averages. So I come out of this first part of my presentation being cautiously bullish about the market. Now, one thing I like to look at is what happened last week. So here is what happened last week. Now, every week, I create, using HGSI, a zillion different user groups. Some of them are scans within HGSI. Some I take out of Investors Business Daily or MarketSmith. Some of them are TradeStation. I then run a group performance analysis looking at over the last 7 days what outperformed. What I look at first is where is the black and the red. So it's mostly black, which means the markets were up, and the S&P was up about 0.5%. All right, so if the S&P is up 0.5%, how did I do? I was up 2.12, not as good as last week, 24 to 17 winners, that's not bad. And then where do I compare to, like IBD was about the same, 50, MarketSmith 250 was only up about 1%. So I outperformed, but growth is clearly outperforming the S&P. That's all I need to see there. So now I'm cautiously bullish, market's in an uptrend. I go back to Woodward & Brown user groups 07, hit warehouse, and I see I have 174 groups. And now if I hit the 2-day force, the groups that have positive momentum are going to come to the top. Okay, and you can see a couple of things. Oil exploration up top, biotech, services. So that's 2 out of the first 3 are energy. Energy had been weak, but I guess energy is starting to move. Integrated oil, so 3 out of the top 7 are energy. If I look at force down 2 days, anything that's sharply moving to the downside, steel, materials, healthcare facilities, infrastructure, construction. So very little to the downside. If I look at a longer term downside, look at 5, there's only 15 groups over the 5-day period that's down. And on the 5-day up, I have 79. So even underneath the major market indexes, you have a lot more of the industry groups moving to the upside. I will tell you that what did strike me on my top-down review this week was the strength in energy. Kind of interesting. I'm not sure if this is going to show anything. Just look at XOP and see what its seasonality is. If there is seasonality. That's not what I want to do. Let's try this again. Actually, let's look at APC, Anadarko Petroleum, because this is one of the ones I might be interested in buying this week. And what do I see here? I see energy, Anadarko Pete, is going into a very strong period of time. In fact, if you buy February, it's not that strong, February 26th, it's up 60% of the time with a 9.2% return. And on the down years, it was down an average of 1.5%. Well, that one looked actually very good today. So maybe this is a seasonally strong period of time on energy. So let's take a look. Right-click on exploration. This is the true strength of HGSI. And let's look at some of these and see if any of these are at a position that you might want to be dabbling. Or more importantly, that I might want to be dabbling. We have Whiting Petroleum. We have a Kahuna on Thursday. Broke above the 50. No earnings per share to speak of. I'm going to skip that one. ConocoPhillips, I like this one. It's already an uptrend, pull back to the 50. It doesn't look just like the indices. Had a pocket pivot on Friday. It's still a weekly bongo down, which is I don't like. Love the earnings per share growth, pays a 2% dividend. Earnings are already out. ConocoPhillips looks like one for the buy list. Parsley Energy, here's APC. It's already broken above its moving averages, had a PSA reversal, mobile breakout from a squeeze, and a Kahuna. I already showed you the seasonality. Look at the earnings per share growth. Is this not the pattern that I like to buy? It is. Noble Energy, Hess, Oasis. I'm looking for another one, an obvious one for me. I've got a couple that I found on my top-down review. I like Diamondback. It's expensive, but again, breaking out above the 50 with a mobile breakout in an uptrend, earnings per share growth, no dividend. So, looks like XOP stocks, exploration and production, look good. Biotech. Here's Biogen. This is one of the big kahunas of biotech, and it's had its troubles of late. Is it done going down? I don't know. Look at the group strength, and here's one of the big guys. It's interesting that it made it to the top of the list, but it's because of the volume it does on a daily basis, probably. I don't know, but let's see. What is it? 1.5 million shares. Amgen, sideways mover, not that exciting. Vertex, I did like this one. Yes, it's also sideways, but on an uptrend. Look at the rising 200. Breaking out above the 50 on a kahuna and a mobile breakout. Great earnings per share per growth. Vertex looked interesting. It's interesting that it made it to the second highest group. What I typically like to do if I'm big on biotech, because sometimes playing the biotech game is tough because of data, is I often just buy LABU if I'm bullish. And I know it's going up because I have a position in it now, and it's moved up since the market pulled back. Big bottom tail here. It looks like it wants to go higher. So biotech, second-rated group, this might be a good place. All right, continuing on the energy beat. Oil and gas services, this is the one I own, is Halliburton. It had pulled back pretty hard. It's a long-term holding of mine. Sometimes I shouldn't have long-term holdings, but beautiful uptrend from here. This is when you want to be long. Clear reversal. Low close doji, sold off. Bottoming here, I think PSA reversal and a mobile breakout. Clearly wants to go higher. Great earnings per share growth. High multiple, 1.5% dividend. I still like Halliburton. Might be a reasonable place to add. Schlumberger, a little bit lower in the pattern. Rig, don't like it. P10, Baker Hughes, FMC. Best of the bunch, to me, looks like Halliburton. Just going down the list, semiconductor devices. Micron. I have a significant position here. I'm sure many others do as well. I have been a sucker for Micron because of its earnings per share growth, and it continues to have great earnings per share, although it looks like it's slowing down. Look at the earnings per share, look at the multiple. You can't do this and either not expand your multiple and have your price go up if you make the numbers. Breaking out here, mobile breakout out of a squeeze, a pocket pivot, a kahuna. After a little pullback into the moving averages, I think Micron's probably one of the best looking charts out there. I am, for disclosure, long Micron. Intel looks like it's going higher as well. Don't like the earnings per share growth, but certainly has been a great performer of late. NVIDIA, the big kahuna, nice lower left, upper right. Great earnings per share growth continue. Its multiple is pretty high. Not so much TI. Broadcom earnings out Monday, so I won't touch it. AMD, not so nice. All right, so I think the clear winners here are Micron, Intel. Going down the list, REITs. Surprised me to see these here with raising rates. Somewhere interesting. American Tower been looking good for a while. They own the cell phone towers. They pay a decent dividend. They have great earnings per share growth, especially when you compare them to the multiple. It's not an expensive chart. It is an expensive stock, but not by PE based upon growth rates. It pays out 2%, so it pays out $2.80. It has no trouble making that. Again, big growth in earnings. Is it going higher? Is their dividend going to go higher? I like American Tower Corp. I wouldn't let it go much below the 200-day moving average, however. Cyrus Run had bad earnings and reversed, 3.3%. Public Storage, another of the types of REITs that are doing higher. Good earnings per share growth, nice dividend. Also an expensive stock. And you've got PSA and a few others that look like it. Extra Space Storage is another one of these. I know I pay $200 a month to store my baseball cards. My wife would like to kill me. Sometimes I'd like to kill myself. It's the kind of thing you can't throw them out because your mother did when you were growing up. And at the same time, what a stupid thing to hold on to because they're not worth anything. But I'll keep paying my money and maybe I'll have grandkids that want my baseball cards. So REITs, with bonds selling off, I wouldn't expect bond equivalents such as REITs and utilities and big dividend payers to be strong, but REITs clearly were strong this week. Internet media, Facebook, every time people say it's done going up, it goes up again. So it's really been going sideways for a long time. Broke above the 50. Is this the time it breaks out to new highs? I don't know. I'm long Facebook, and I keep writing calls against it, and I haven't been called away. One day I'll be called away, and I'll be happy to pocket my profits. Alphabet, Google looks a lot like Facebook from where it's at today, but unlike Facebook, it had a nice uptrend, pullback, now sitting above the 50. Cena. Here's one that I just love to play this stock. I must have picked it up, I think it was in the 30s when I first got into this stock, when it was down here. And why would I have gotten into this stock? Actually, yep, this is when I got into it. Actually, it was less than 20. I got into it as it broke above the 50, had volume come in, and it's just been just a great stock ever since. It has pulled back several times to the 50, and then I look for buying opportunities where I have pocket pivots, kahunas, mobile breakouts, Bible gap ups, and it just keeps on running. So this is Weibo. Unfortunately, I have 140 calls sold against it, so I'll probably be called away on these, although I may roll them higher. We'll have to see. Great earnings per share growth. I think this one goes higher. I'd rather buy it closer to the 50. All right. Integrated oils. I told you about ConocoPhillips before. What else do we have up here that looks good? ExxonMobil, earnings per share good, dividend good. You know, I guess you want to buy these things when they're low and starting to go higher. You know, is this done going down? I don't know. It's kind of low in the pattern. Chevron, similar, 4.0. Petrobras breaking out to new highs. You just have a hard time buying something from Brazil. Here's BP, 5.9%. The one that I actually bought a while ago, which I talked about and actually gave the trade, was Ecopetrol. And I think we bought it when it was around 12. So that means we bought it somewhere over here. And again, same old pattern. Mobile breakup from a squeeze, a kahuna breaking above the moving averages. And this thing has had just a major run, almost a double. You know, I've rolled it a couple of times, but it's still, even today, I own the shares now. My trade price was $12.50. That's, as I said. It's currently trading at $18.43. And I'm up since that $12.50, $47,000 on that trade. This stuff works. I mean, you know, I don't want to just go over my numbers, and I'll tell you I'm over 40% up for the year, and that's with the pullback in the market. So I got into it on this base, and when it broke out above the base, and it's been good to me. Ecopetrol. I think it's one that might still go higher. Application software. Boy, here's a name from the past. Momo Go-Go. Bible gap up on Friday. Kahunas. It already started moving up. Look at the group strength. Bongo is green. I'd have to learn more about the upcoming earnings. Great demand. Momo looks like it's wants to revisit it. It's Momo. It's Mojo. Adobe, great lower left, upper right, great earnings per share growth, but the PE is pretty much as high as it gets. Activision, another one of the gaming stocks. BlackBerry looks poised for a breakout at the 50 with a pocket pivot, kahuna, and a mobile breakout on Friday. So a number of the application software stocks look good. Telephone carriers, you want to buy these when they're down because of their dividends. Verizon is down. Pays a dividend close to 5%. Buying it off the 200, 4.9% dividend. You're not buying this for growth. You're not buying it because you think it's going to 100. You're buying it because you're buying it at the average price over the last 200 days, and you're going to get almost a 5% return. T-Mobile, no return. AT&T, just like Verizon, 5.4%. So if you're a dividend guy, you know, now's probably the time to be looking at Verizon and AT&T. Number 9 was IT services. When's the last time you thought HP was a great stock to buy? Well, it is. Take a look at this. It bottomed back here in November, had great earnings with a Bible gap up on Friday, earnings per share turning around. I'm not going to go too further down here in that list as I'm starting to get tired, and then specialty pharma. So what I do is I go through these lists. I build a watch list of the stocks that I'm going to try and play this week. Here's my watch list, and So we talked about micro, Mobo, Trade Desk had earnings out. You look at Caterpillar, what a great growth story this has been for an old industrial A. If we're really going to have all this spend on infrastructure, Caterpillar is going to go high, why not buy it off the 50-day moving average? That's when I like to buy these things. Express Scripts, they're in cost control and healthcare. The PBMs are under a lot of assaults, but it's pulled back by the 50, a takeout of the PSAR. I might be interested in chasing that one around a little bit. I talked about Anadarko Petroleum. Looks like it wants to break out here. Mobile breakout from a squeeze and a kahuna. This is a great energy play. And look at the turnaround in earnings from minus to positive. Big earnings per share growth. United Rentals, an expensive stock, but it's pulled back. Looks to me like it wants to go higher. That's my pattern. Phillips 66, the one energy thing that wasn't up at the top were refiners. But look at the earnings per share growth. It's sitting on the 200-day moving average. There's a high close doji there if you follow John Person. 3% dividend. Sometimes I bottom fish, and Phillips 66 looks bottom fishable. Pioneer Natural Resources, another one of these expensive but strong energy properties, and big earnings per share increases here. PXD. Urban Outfitters, basing, broke out with a mobile breakout from a squeeze, pocket pivot and kahuna. Weekly bongo is green. If you've been watching me for any at the time, you know that these are the stocks that I love. Momentum in a squeeze, in an uptrend with a pullback. So there's a lot of good-looking stocks out there. Paycom is another one I've been in for a long time, breaking out to all-time highs. Of course, I've got calls written against this at 100, so I'm going to have to figure out what I'm going to do with those calls. But another one, earnings are out. Try and buy it on pullbacks. There's an Ecopetrol. Even Cummings, sitting right on the 200. I just thought this was interesting because here's what happened on the 200 last time. Let's just play with this. Here's how my mind works. Off the 200, it ran up to here before it died. And that would have been a 20% return in 52 days. Off the 200, it ran to here before it died. A 21% in 43 days. Off the 200, it runs to, I don't know, but what the heck? Could you buy it at a better price point than at the 200-day moving average? Not a growth stock, but a stock that I think goes higher whose earnings are out. So what do I do during the week? A lot of people, how do you follow so many stocks? So first thing I do is I take the stocks that I currently own in any account, long or short, and I go into that screen here, which was my trading system for John's stuff. I go data, insert a label row, and I'm going to quote current, Scott, long and shorts. I'm going to hit paste. And now I'm going to be able to watch these stocks during the day, looking for changes in trend, new high close, low close dojis, breaks above resistance and support. Oh yeah, by the way, I can also monitor during the day for things like Bible gap ups, pocket pivots, when do they have their earnings due? And then I want to go back and do the same thing on my buys. I'll patch these in. And it doesn't populate immediately on the weekend, but before too long, I'm going to be looking at the types of things that I like to look for, and I'll be looking at them during the week, during market hours, after hours, in between watching radar screens and then doing my scanning. and looking for various buy and sell signals, my trilogy buys, I will be able to watch the market closely and hopefully continue to make some money in this market. On that note, I just want to go back and revisit what I said about my live meeting. It will be the 9th. Was it the 9th? Let me go back. It was the 6th of April in California. All I'm asking for, if you think there's a fair chance that you would attend a one-day $500 meeting with 8 hours of me and 2 meals, please email me at hgsidoc@gmail.com, and if I get enough interest, we'll set something up. Thank you all. Have a great night, and let's see what Powell has to say. Goodbye.